Hello everyone, welcome back to Forex Signals TV. I'm Shain Vernier, analyst over at forexsignals.com. Today we're going to talk about the number one job a trader has each and every day to make money in the live markets. You must be able to read market state. Market state is the direction of price action or lack thereof. We're talking about trends, we're talking about market rotation. The sooner you can spot a trend, the sooner that you can define a rotational market, the quicker, the faster, the more efficiently you're able to adjust your trading strategy, dive into the markets with positive expectancies and not necessarily chasing price all around the charts. Now today we're going to talk about identifying trends specifically. I'm going to give you 3 ways that you can identify trends in a matter of seconds. They're very basic, they're very straightforward. This isn't quantum mechanics, no heavy mathematics, no mental gymnastics needed. So let's get over to the trading lab, let's dive into the charts, let's see what we can do. Okay, the first thing we need to do is define what a trend is. A trend is a directional move in price. It can be bullish or bearish. A bullish trend is a series of higher highs. Price has an upward trajectory. A bearish trend is a series of lower lows. Price is falling. It's falling in a really concerted, sustained fashion. Now, what don't we have to do to identify trends? We don't need to be get into quantum mechanics. We don't need to get stuck on esoteric and elegant mathematics, but we do need to understand one thing. We need to understand the basic concept of slope. Slope is rise over run. That's all we need to know about it. As it pertains to price action, slope is how fast price is rising or falling with respect to how time is passing. Now think about that for a second. What does that mean? It means that the faster price is rising, the steeper our slope is going to be, the faster it's falling, the more negative our slope is going to be. We need to take these into account when we look at the 3 ways that we can identify a trending market in seconds. Remember, slope, rise over run or fall over run, and as it pertains to price action, it is how fast price is rising or falling with respect to how fast time is passing. Remember that. Okay, so there's 3 ways to define a trend in seconds using slope. The first way that we're going to look at is line chart. Now, basically, this can take you upwards of about 5 seconds to do. You take your charting platform, you transition from your OHLC bar chart or your candlestick charts, and you go right to a line chart. Very, very simple, very, very easy way to do to identify trends. The next is connect the dots. We'll draw some trend lines. We'll actually identify which way price is moving, either in a bullish or bearish fashion. Trend lines are fantastic tools. There's a few different ways to draw them. We'll go over those here in a second. And the third way is Bollinger Bands. A few weeks back, we talked about Bollinger Bands and how they could be used to trade trending markets and how they could be used to trade rotational markets. I'm going to show you what I use them for preeminently, and that is to identify market state, typically a trending market versus a rotational market. All right, let's look at the number 1 rule of trend recognition. I can't stress this enough. Identifying a trend is not EMC squared. You do not have to be the smartest folks in the world to identify trends. It should be obvious. Trending markets are visual in nature. Once we understand the concept of slope, we can look at our charts and say, okay, trend's up, the trend's down. It becomes second nature. Remember, trends are obvious. The number 1 rule in trend recognition. If you find yourself looking hard for a trend, it doesn't exist. It's a fugazi. It doesn't exist. So remember, above all else, a trend should be easy to spot. If it's not a trend. All right, let's go over the price charts and have a look at really these ways of identifying a trend in seconds. You can see right here, this is a Euro USD 30-minute chart. Looks familiar to pretty much everybody watching. Very simple way of identifying this, identifying a trend. If you are confused, you go right in here and you build a line chart. It's that simple. We click over to line chart and say, okay, what's price doing? 30-minute basis, intraday trading. What do we got here? We've got an extremely steep slope. Remember, rise over run. Price really rose and time, not much time passed at all. So that gives us a great look at intraday pressure and intraday trend. If you wanted to deconstruct this even more, you could go down to your 15-minute, your 5-minute, your 1 minutes and get an idea of how price moved within that periodicity. So right there, strong bullish trend. Right here, strong bullish trend, and now we've got a bearish trend developing. Remember, short time frames can get convoluted. You click over to that line chart, it's going to give you a good idea of what price action's doing right now. The second way of identifying a trend very, very quickly is to draw a trend line. Let's connect the dots. Now, I do them a little bit different than a lot of folks. I'm going to go over a couple ways that we can draw a trend line right here. What I like to do is I like to stick to the upper or lower extremes. So right here, now you'll notice a couple of things. I'm connecting the higher highs. Doesn't have to be perfect. This isn't an according to Hoyle trading methodology. I'm not telling you draw a trend line and then sell when it hits the trend line. Personally, I don't. I work with horizontal support resistance lines. I'm not really into diagonal markets or really approaches to the market, approaches to active trade. That's not to mean that they're wrong. For me, I use trend lines to define a trend. And right here, what do we have? We have a bullish trend line. Why? Because it has a positive slope. That rise over run, price is rising faster than time is passing, and that's going to give us a good look at this trend. Even though it is on the monthly chart, this is a fantastic look at a macro trend. Now, one of the best things about drawing trend lines is it's simple. We can change our minds. We can apply it to any kind of market state. And if you take a look at the last 3 months of WTI crude oil, what do you have? You got a series of lower lows. Series of lower lows means that we're in the midst of a bearish trend. So when we take a look at that, that's a very, very simple, straightforward way to do this. A couple other things that I would like to show you is a lot of people, a lot of folks, really professional traders, prefer to draw their trend lines through the center of the price bar. There's nothing wrong with that. If it makes sense to you, go with it. One thing that I don't favor that way of drawing trend lines because I want to know where those upper extremes are. I want to have in my head, well, what is the periodic high for this area? Has it coincided with another one of my resistance levels? Perhaps there's a support level towards a bearish trend. I want to know where those periodic lows are. I feel like if I go through the center of the price bars, I may not get that type of reflection. So that's another way. And finally, the last way that a lot of people really favor is channels. And you'll see right here, this channel right here, boom, nice bearish trend. It's more of a flat market. Let's get you a better example than that. Your channel is going to be something like this. Boom, higher highs, lower lows. You get a nice channel. You get boom. You got the higher highs. You've got the higher lows. You've also got the midpoint. Now, the way that I define trends, series of higher highs, that's my bullish trend. Series of lower lows. I don't want to worry about what the lows are doing in an uptrend. When we start looking at pullbacks and buying in or selling there, then we can do something with that. In any case, right here on the US 100, this will be our final way that we can identify a trend in just seconds. What you're going to want to do here is just add an indicator. It's as simple as that. We talked a lot about Bollinger Bands in one of the previous videos about 3 weeks ago, and you can see right here I put Bollinger Bands on the chart. This is what I use the bullies for. I look at the slope of the upper and the lower Bollinger Band. As you can see right here, it's very similar to our channel analysis, except these lines aren't rigid. They're not exactly flat. There is a little bit of movement with the market volatility, but you can definitely see there is a negative slope on this lower line, and there's a negative slope on this upper Bollinger Band. Upper Bollinger Band's pointed down, lower Bollinger Band's pointed down. What does that mean to me? It means that we're in the midst of a directional move south. Now, feel free to mess around with your periodicities on this. For instance, this US 100, this is a broader look at a weekly chart. You can see the moves, you can see the retracements, you can see the move. Still, broader price actions headed down. If you want to go back to a smaller chart and really toggle around with intraday price action, you certainly can. You can go right here, you go up to indicators, take a good look at your bullies, boom, add your Bollinger Bands. What do you have? You've got a sloping line right there that defines your bullish breakout, bullish trend right there, and then we flatten right out, and you can see that our trend sort of subsides. So those are 3 basic ways that you can identify a trend in just a matter of seconds. I think those are pretty rock solid. So the number one thing we do in the markets is identify market state. That's 3 ways you can find a trend in just a few clicks of a mouse. So what do you think? Those are 3 ways you can discern a trend in seconds. Remember, market state is everything. It doesn't matter if you're a swing trader, a day trader, or an intraday trader. You have to be able to tell a trend from a rotational market. And on the surface, it sounds easy. Well, a trend's just a directional move in price. Yes, but within what context? It's very important that we understand how the periodicities of our chart impact price action. As we move from a monthly, weekly, to a daily, to a 30-minute chart, you'll notice price action gets choppier and choppier. Why? Because those charts, those lower periodicities, reflect the intraday noise that we're faced with every day. And understanding how to address that noise can help us get to the promised land. Green pips and positive P&L. I think that's what we're all looking for. In any case, we really appreciate your patronage here at Forex Signals TV. Be sure to follow us on the socials, hit the subscribe button if you like, and let us know what you think below. I say this every video, but really, let us know. All comments are welcome. If you have critiques of this video, be sure to point them out. I'm more than happy to engage on really any level when it comes to trading. I love to talk to intelligent points of view. I think they're fantastic. So we almost welcome the critiques more than we welcome the pats on the back. That being said, a little pat on the back never hurt. So moving forward, remember, if you're an active trader, market state is everything. It's important that you don't wind up trying to trade trends in rotation and rotation within trends. It's a one-way ticket to the poorhouse, and it's a direction you don't want to go. So thanks again for joining me. If you have any other questions, pop by the trading room, stop in. One of our talented team of analysts will be sure to help you out. All right, until then, trade the action well, and we'll talk soon.